Welcome to OK Bitcoin 69. Consider to subscribe and let's dive into today Bitcoin news.
More breaking news on Amazon. Let's get back to Kate Rooney. Kate.
Hey, Morgan. So Amazon's founder and former CEO Jeff Bezos plans to sell another 0.5 million shares. That's according to $1 million worth of shares. That's the dollar amount, according to a regulatory filing that just came out. It comes after Bezos filed last week, saying that he planned to sell another $25 million worth of shares, or 25 million shares worth roughly $5 billion. Amazon's last filing indicated that Bezos had adopted what's known as a 10b5-1 plan, a stock sale plan that allows him to sell these shares through the end of 2025. Bezos has been funding some private endeavors like Blue Origin, for example. He's also been giving shares of Amazon as part of his philanthropy efforts. Guys, back over to you.
And you've said that you're willing to cut interest rates before reaching the 2% target. Is the decision to cut interest rates going to be driven by reaching a particular target en route to 2%, or is it driven by the overall trajectory of the inflation rate?
It's going to be driven by the totality of the data. There isn't a particular number that we have in mind that we have to get to. It's more, you look at all of the data, and the question we're asking ourselves is, are we sufficiently confident that inflation really is moving down toward 2%? So what's the underlying inflation rate, looking through the volatility? We're also looking, though, as I mentioned, at the labor market, and we're asking ourselves, we have to take into account now maximum employment, that mandate. So we're looking at both of those in the decisions that we make.
I mean, are you confident that the inflation rate is on a downward trajectory?
I do have some confidence of that. I think we've seen that over the past several years. The question is, are we sufficiently confident that it is moving sustainably down to 2%? And I'm not prepared to say that yet.
The conversation appears to involve discussions around inflation and the Federal Reserve's approach to interest rates. Here's a summary. 1. Inflation targeting. There is a question about whether the Federal Reserve will cut interest rates before reaching a 2% inflation target. The response indicates that the decision will not be solely based on hitting a specific inflation number, but rather on a comprehensive analysis of all available data. 2. Data-driven decision-making. The Federal Reserve looks at the totality of economic data, including inflation trends and labor market conditions. They aim to assess whether inflation is genuinely moving towards their target of 2% and consider the volatility in inflation data. 3. Maximum employment mandate. In addition to inflation, the Federal Reserve now also considers its mandate for maximum employment. This means they are evaluating both inflation and labor market indicators when making decisions on interest rates. 4. Confidence in inflation trajectory. The speaker expresses some confidence that inflation is on a downward trajectory. They likely see indications in the data that suggest inflation may be easing or stabilizing towards their target. Overall, the Federal Reserve's approach is flexible, with a focus on achieving both stable inflation and maximum employment, rather than rigidly adhering to specific numerical thresholds before adjusting interest rates.